in order to keep the system going, they can't let money supply decline. But they've let money supply decline, which tells me the plan is to tank the entire credit system. And that's how you will own nothing. The you'll be happy part, I don't know what they're going to put in the water or the air, but that's how you'll own nothing when credit collapses.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
In an era where economic certainty is as rare as finding a needle in a haystack, where the very foundations of our financial systems are questioned, one voice stands out, piercing through the noise with a warning that could alter the course of your financial future. Bill Holter, a sage in the realm of precious metals, casts a prophetic vision of the imminent collapse of fiat currency. Imagine a world where the once mighty dollar, the backbone of global trade and the emblem of economic prowess, teeters on the brink of irrelevance. As the BRICS nations, Brazil, Russia, India, China, and South Africa, strengthen their economic ties, fortifying their position with gold reserves that mock the fragility of paper money, we stand on the precipice of a seismic shift in how wealth is preserved and multiplied. But amidst this looming financial upheaval, Holter doesn't just outline a scenario of doom and gloom. He offers a beacon of hope, a strategy for not just surviving, but thriving in the tumultuous times ahead. Silver, long overshadowed by its lustrous cousin gold, is about to step into the limelight, poised to outpace the growth of gold and shatter price records in a display of market dynamics that will leave onlookers in awe. Picture this: silver, the humble metal, catapulting to levels never before seen, becoming the unsung hero for those seeking refuge from the volatility of conventional wealth storage methods. Why silver, you might ask? It's not just about its inherent value or its indispensable role in the burgeoning sectors of green technology and renewable energy. No, the rise of silver is a testament to a deeper, more fundamental shift, a mass exodus from the confidence in fiat currencies, shaken by the unpredictable policies of central banks and the erratic swings of the stock market. In this chaotic dance of numbers and projections, silver stands firm, a steadfast guardian of wealth in an era of uncertainty. And so as we gaze into the horizon, pondering the fate of our financial stability, the words of Bill Holter echo with clarity and urgency. Anyone who wants to retire soon should be stocking up on silver, he advises, not just as a precaution, but as a wise and proactive measure to protect and grow wealth in the face of impending economic transformations. This isn't merely a suggestion. It's a clarion call to action for those who wish to navigate the future with confidence and foresight. The question now is not if the fiat collapse will occur, but when. And when it does, where will you stand? With silver in your portfolio, you're not just preparing for a possibility, you're positioning yourself at the vanguard of a financial revolution, ready to seize the opportunities that chaos presents. As we embark on this journey through the intricacies of the silver market, through the predictions and analyses that paint a picture of unprecedented growth, remember this: the time to act is not tomorrow, not when the first domino falls, but now. In the chapters to come, we'll explore the forces propelling silver into the spotlight, dissecting the economic, technological, and geopolitical trends that underpin its ascent. Stay tuned, subscribe for more insights, and prepare to witness the silver surge, a phenomenon that could redefine wealth for generations to come. Before we get going, let's take a look at how the government's best and brightest are solving the nation's debt problem. Subscribe to stay up to date on their groundbreaking work.
Well, you asked before regarding the Fed. I don't think the Fed is going to cut rates just on their own. I think they're going to wait for some type of, I think they're going to be forced into making a cut. But when all is said and done, I do believe that the dollar is going to be crashing so badly that the Fed is going to have their hand forced, and they're going to have to tighten rates, have to raise rates as the only way to protect the dollar. So I guess my answer is the Fed's in a box, because if they lower rates from here, then you're going to kick off just natural dollar weakness. And that will coincide with some type of a negative event, whether it be, a bank's going under, you get a slew of real estate foreclosures, big commercial real estate foreclosures. The Fed will be forced into a cut is my belief. And I also believe that because of the action of the dollar, they're going to be forced into raising rates into a weak economy, which obviously is, that's not the policy they would prefer, but it's the policy they're going to have to do. Is they're going to have to raise rates to support the dollar, which again, raising rates on such a hyper indebted system, now you're now
As we venture deeper into the silver saga, understanding its current state becomes crucial. The price of silver, trading firmly near $24.90, tells a tale of resilience and potential amidst the broader economic tapestry. This isn't just a number, it's a beacon signaling silver's readiness to ascend in times of mixed signals from U.S. Treasury yields and a world bracing for the Federal Reserve's next move. Herein lies the first piece of the puzzle, the calm yet anticipatory stance of the market. As we edge closer to Jerome Powell's next press conference, hints at undercurrents ready to fuel a seismic shift in silver's trajectory. Let's not gloss over the significance of the Fed's decisions in this narrative. As interest rates play their dance of rise and fall, the allure of non-yielding assets like silver sharpens, especially in the face of potential dovish or hawkish surprises. The financial alchemists, watching over the bond markets, stand at the ready, poised for volatility that could very well spell a boon for silver. Why? Because in a world where traditional economic indicators sway with every word uttered by monetary policymakers, silver remains unfazed, a silent observer ready to claim its throne. The technical analysis of XAG/UST further solidifies silver's bullish stance. With the Relative Strength Index, RSI, painting a picture of dominant buying power, and the Moving Average Convergence Divergence, MACD, hinting at a market ripe with optimism, one can't help but sense the building momentum. This isn't mere speculation, it's a calculated observation of a market on the cusp of greatness. The silver bulls, firmly in control, drive this narrative forward, underscoring a trend that speaks volumes of silver's undervalued potential. But to truly grasp the essence of silver's impending ascent, one must understand the global context it operates within. The juxtaposition of a robust demand from the green technology sector against a backdrop of constrained supply paints a compelling picture. The paradox of rising industrial demand, particularly from solar and electrification projects, against a slight decline in overall demand due to market corrections, sets the stage for a dramatic reversal. This is where silver's story diverges from the mundane to the extraordinary. Imagine, if you will, a world where the demand for silver, fueled by its indispensable role in renewable energy and technological innovation, collides with a supply chain unable to keep pace. This isn't a distant future scenario, it's the reality we're stepping into. The narrative isn't just about silver as a precious metal, it's about silver as a critical component of the next industrial revolution. As supply struggles to meet the explosive demand from sectors that are not just optional but essential for our transition to a greener, more sustainable future, silver's value proposition becomes crystal clear. In weaving this story of silver's current state, we lay the foundation for a journey of discovery. It's a narrative that goes beyond mere investment advice, offering a glimpse into a future where silver isn't just a metal, but a cornerstone of economic resilience and technological advancement. As we peel back the layers of this intricate market, the call to action becomes evident. To understand silver is not just to speculate on its future, but to recognize its pivotal role in shaping the world of tomorrow. Keep watching, subscribe for more insights, and join us as we unravel the mysteries of silver's path to unprecedented heights.
If you've ever read G. Edward Griffin's book, The Creature from Jekyll Isle, then you'll understand that where we are now was the plan from 100 years ago. Basically, what has happened is the American structure, if you will, has become hyper indebted. And in order, first off, you got to understand that the U.S. was a big stumbling block for the globalists. So in order to get past, through, around, whatever you want to call it, the United States has to be taken down. And it's my view that this long-term plan of taking the United States down is, you're looking at the end game right now. We have the highest indebtedness on any ratio, however you want to look at it, whether it be individuals, corporations, states, the federal government, whatever. The way to take the system, the financial system down, and the social aspect is we can get into that if you want. But from a financial standpoint, what have they done? If you wanted to take this Ponzi scheme down, what would you do? First off, you would stop growing the money supply. You'd actually shrink the money supply. And money supply now for the last 2 years has shrunk. We're probably 4 or 5% lower today than we were January 1st, 2022. So that's the first thing, is they shrunk the money supply. The second thing, they started raising interest rates. And what does interest rates do? It makes things worth less, and it makes it more difficult for any company. And we can get into the country itself, because we've got over 6 trillion coming due this year that has to be refinanced. But it prevents many companies from being able to refinance. Just look at many of the commercial properties all over the country that are needing to be refinanced. They can't get it done because the numbers that worked at 2% don't work at 5 or 6%. So they've raised rates. That's another pin in the bubble. And then as far as attracting capital to the United States, what have we done? We confiscated 300 billion of Russian treasury assets. And now they're talking about using that $300 billion to rebuild Ukraine. So you've got mega money all over the world looking at the United States and saying, hey, wait a minute. If they can do that to Russia, they can certainly do that to us. We're not putting more money into the United States. So really, you've had a 1-2-3 punch at the hyper indebtedness. It's a classic plan on how to blow up a Ponzi scheme.
As we delve deeper into the world of silver, we discover a landscape marked by contrasts and paradoxes, particularly when examining the demand and supply dynamics shaping its future. The year 2023 presented a curious case. Industrial demand for silver burgeoned, especially from sectors critical for the future, such as solar energy and electrification. Yet paradoxically, total demand saw a decline, leaving many to wonder about the forces at play behind these trends. This dichotomy isn't merely a statistical anomaly, it's a narrative ripe with implications for the savvy investor. The initial drop in demand, particularly from the jewelry, silverware, and physical investment sectors, might appear disconcerting at first glance. However, this contraction is less about diminishing interest and more about a market correcting itself after the exceptional highs of the previous year. It's crucial to understand that these sectors are not in decline, but are recalibrating after a period of significant overextension, particularly noticeable in markets like India, which experienced record-high purchases in 2022. Yet beneath this veneer of correction lies a robust undercurrent of sustained demand, particularly from industrial applications. The decline in physical investment and jewelry demand may have temporarily overshadowed this fact, but it's the industrial demand, especially for green technologies, that will dictate silver's trajectory in the years to come. The narrative here isn't one of decline, but of a market in the throes of evolution, shifting from traditional forms of demand to new, future-proof avenues. Furthermore, the constrained supply situation adds another layer of complexity to silver's outlook. Despite a slight decrease in mine production and minimal growth in recycling, the supply side struggles to keep pace with the burgeoning industrial demand. This imbalance is not a temporary blip, but a structural challenge that will continue to underpin silver's value proposition. With mine production down and recycling unable to bridge the gap, the market is poised for a significant shift, where demand increasingly outstrips supply, setting the stage for potential price escalations. This evolving demand-supply landscape is further complicated by the global push towards renewable energy and electrification. Silver's role in these sectors cannot be overstated. It is not merely another commodity, but a critical component of the green transition. As countries and corporations ramp up their commitments to sustainability, the demand for silver, given its unmatched electrical conductivity, is set to skyrocket, particularly in photovoltaic cells used in solar panels and various components of electric vehicles. The paradox of silver's current situation, declining total demand against a backdrop of increasing industrial use and constrained supply, is a harbinger of what's to come. For investors, the message is clear. The current correction in demand is a temporary pause before a likely surge, driven by irreversible trends in technology and sustainability. This isn't just speculation, it's a strategic forecast based on observable market dynamics and the intrinsic role silver plays in critical future-facing technologies. As we peel back the layers of silver's demand-supply dynamics, we reveal not just the complexities of the market, but the opportunities it presents. The journey ahead for silver is one of significant potential, marked by the pivotal role it will play in the global transition to a more sustainable and technologically advanced future. For those tuned into these trends, the current market corrections represent not a sign of weakening, but a moment of strategic opportunity. Stay engaged, subscribe for insights, and join us as we continue to explore the unfolding narrative of silver's critical role in shaping our world.
First off, there's no answer to it. I mean, it's a mathematical problem that really cannot be solved. I mean, it's not solvable. At this point, mathematically, we either default and don't pay, or they print dollars in the trillions to make the payment. Either way, you end up with zero, because when all is said and done, that's where the purchasing power of the dollar is going. So, I mean, that's why I think nobody's talking about it on either. You're not seeing the Democrats talk about it. You're not seeing the Republicans talk about it, because nobody has an answer. And it's like you stick your head in the sand and hope you don't.
Diving further into the intricacies of silver's ascendancy, we pivot our focus towards the sweeping influence of global monetary policies, which act as the lifeblood of precious metal markets, including silver. The interplay between the decisions of the Federal Reserve and the movement of the U.S. dollar paints a vivid picture of the forces at work behind the scenes, dictating the ebb and flow of silver prices. The Federal Reserve's monetary policy stance, oscillating between dovish and hawkish tones, serves as a barometer for the broader economic climate, influencing investor sentiment and, by extension, the attractiveness of silver as an investment. In periods of dovish policy, where the focus shifts towards easing and interest rate reductions, non-yielding assets like silver become increasingly appealing. This appeal is amplified in a landscape where traditional investments are buffeted by low interest rates, pushing investors to seek refuge in assets that offer a hedge against inflation and currency devaluation. Simultaneously, the U.S. dollar's performance on the global stage plays a critical role in shaping the fortunes of silver. A strong dollar typically exerts downward pressure on precious metals, as it increases the cost of dollar-denominated commodities for holders of other currencies, dampening demand. Conversely, a weakening dollar, as witnessed in anticipation of dovish shifts by the Fed, can ignite a rally in silver prices, underscoring the inverse relationship between the currency's strength and the metal's market performance. This delicate dance between monetary policy and currency valuation is not just a matter of economic theory, but a real-world dynamic that offers a window into silver's potential movements. As the Fed navigates the complexities of inflationary pressures and economic growth, its policy decisions become signals that savvy investors decode to time their entries and exits in the silver market. The anticipation of policy shifts can lead to preemptive moves by market participants, creating volatility and opportunities in the silver space. Moreover, the broader implications of these policies extend beyond the borders of the United States, affecting global investment flows and currency markets. In a world increasingly skeptical of fiat currencies' enduring value, silver stands out as a tangible asset that retains intrinsic value, unaffected by the whims of central banks and the printing presses of fiat currencies. This global perspective underscores the strategic role of silver as a diversifier and stabilizer in investment portfolios, especially in times of monetary uncertainty and currency fluctuations. As we unravel the influence of global monetary policies on silver, it becomes evident that the metal's journey is inextricably linked to the decisions made within the halls of central banks and the fluctuating fortunes of the U.S. dollar. These macroeconomic levers shape the landscape in which silver operates, offering insights into potential price trajectories and investment strategies. For investors keen on navigating the turbulent waters of the precious metals market, understanding these dynamics is not just beneficial, it's essential. In this exploration of silver's relationship with global monetary policies and currency movements, we've uncovered another layer of complexity in the metal's market dynamics. As we continue to journey through the multifaceted world of silver investing, the interplay of economic policies and market responses offers a rich tapestry of insights and strategies for those looking to capitalize on silver's potential. Stay tuned, subscribe for further insights, and join us as we delve deeper into the economic currents that will shape silver's future.
I mean,
Politics.
that's obviously politics plays a part of it. It's pretty interesting though that Malala is he's a nationalist. Sounds like he does not want to be a globalist, but yet he's hitching his train to the dollar. I mean, the reverse of that. Look at Saudi Arabia. Saudi Arabia has cut deal after deal with Russia and China, and they've come out and they said they will accept other currencies other than dollars, which was a huge change from the 1973 petrodollar. And then going one step further, the United Arab Emirates came out and they said they will not accept, they'll accept foreign currencies, but they will not accept dollars. So, I mean, you got a good part of the world trying to back away from dollars, and they're doing so in their own best interest.
As we journey further into the unfolding narrative of silver, we reach a pivotal chapter that underscores its burgeoning significance within the investment domain. This chapter isn't just a tale of numbers and charts. It's a story of shifting paradigms and growing recognition of silver as not merely a commodity, but a strategic asset in the broader tapestry of global finance and investment. In recent times, we've witnessed a marked shift in the investment landscape, with large financial institutions and savvy investors beginning to reassess the role of silver in their portfolios. This reassessment isn't born out of whimsy, but is a calculated response to the evolving dynamics of global markets and the increasingly apparent limitations of traditional financial instruments. The allure of silver, in this context, is multifaceted, combining its historical pedigree as a store of value with its burgeoning role in the technological and sustainable energy revolutions. The strategic appeal of silver is further magnified by the global trend towards de-dollarization. As nations and economic blocs seek to diversify their reserves away from the US dollar, precious metals, including silver, emerge as viable and attractive alternatives. This diversification drive is not merely a hedge against currency volatility, but a strategic maneuver in a world where economic power shifts and geopolitical tensions reshape the contours of international trade and finance. Moreover, the investment appeal of silver is catalyzed by its dual nature as both an industrial and a monetary metal. This unique positioning allows silver to benefit from both the demand dynamics of industrial usage, especially in high-growth sectors like renewable energy and electronics, and the investment flows seeking safe haven assets during times of monetary easing and fiscal uncertainty. The result is a metal that stands at the confluence of multiple demand streams, each reinforcing its value proposition in a world where diversification and strategic asset allocation become paramount. This revaluation of silver within investment portfolios is supported by a growing body of analysis from leading financial institutions and market analysts. Predictions of a bullish silver market are increasingly common, predicated on the metal's scarcity, its indispensable industrial applications, and the broader macroeconomic trends that favor tangible assets over fiat currencies and ephemeral digital assets. These analyses often point to a future where silver is not just a component of the investment landscape, but a cornerstone of it, reflecting broader shifts towards sustainability, technological advancement, and economic diversification. In crafting investment strategies that are resilient to the vicissitudes of global markets, the strategic incorporation of silver offers a compelling avenue for risk management, growth, and value preservation. This narrative shift, from viewing silver merely as a commodity to recognizing it as a strategic asset, marks a significant evolution in investment philosophy, reflective of the changing realities of the 21st century economy. As we close this chapter on silver's emerging role in investment portfolios, it's clear that the story is far from over. The metal's journey is emblematic of broader shifts in the global economic and financial landscape, highlighting the importance of adaptability, strategic foresight, and the willingness to embrace new paradigms in asset allocation. For investors looking to navigate the complexities of today's markets, silver offers not just an opportunity but a beacon, guiding the way towards diversified, resilient, and forward-looking investment strategies. Stay with us, subscribe for more insights, and continue to explore the profound transformations shaping the future of investment in silver and beyond.
I don't think gold has a new role. I think the role of gold is money and everything else is credit. I mean, J.P. Morgan testified close to those words in Congress. The reason you want to own gold or the reason you want to own silver is because they cannot default. And what we talked about earlier, the world being, or literally the whole world, but led by the U.S., is hyper indebted, and we're moving into the phase, and you're already starting to see it. We're moving into the default phase, and that's why you want to own gold. That's why you want to own silver, because in a world that is defaulting around you, gold nor silver can default. And it goes back to Richard Russell, for years and years and years, said that when when it finally blows up and goes down, the one who loses the least will be the winner. There's not going to be any outright winners that profit from the collapse, but there will be those that have gold and silver. They will have capital when the system reboots, when the bulk, the majority, especially if you agree with the great taking, which I do, because I do believe that that's the plan, is to basically take your assets. If you have capital when this thing reboots, your your family will have wealth for generations upon.
Venturing further into the labyrinth of silver's ascent, we now shine a light on the technological advancements and the green transition, forces propelling silver into a realm of unprecedented industrial demand. In this era, where sustainability is not just a choice but a global imperative, silver's role transcends mere value. It becomes a linchpin in the machinery of progress. The narrative of silver in the context of technological innovation and the green transition is both fascinating and crucial. Silver's unmatched electrical and thermal conductivity properties had made it an irreplaceable component in a wide array of technologies, from solar panels to electric vehicles, EVs, and even in the burgeoning field of 5G telecommunications. These applications are not just niches within the broader industrial landscape. They are at the forefront of a global shift towards sustainable energy and advanced technological infrastructure. The solar energy sector, in particular, stands out as a beacon of silver's industrial demand. Photovoltaic, PV cells, the heart of solar panels, rely on silver's conductivity to efficiently convert sunlight into electricity. As countries around the world commit to ambitious renewable energy targets to combat climate change, the demand for solar panels, and by extension, silver, is projected to soar. This isn't speculative. It's a trend backed by substantial investment and policy shifts globally, pointing towards a future where silver's role in energy production is both critical and expanding. Electric vehicles, another pillar of the green transition, further underscore silver's significance. With each EV containing more silver than traditional vehicles, due to its use in electric motors and battery management systems, the shift from internal combustion engines to electric powertrains heralds a significant uptick in silver demand. As global EV adoption accelerates, driven by policy incentives and growing consumer awareness, silver finds itself at the heart of another industrial revolution, one that promises cleaner air, reduced greenhouse gas emissions, and a departure from fossil fuel dependency. The push towards 5G technology, with its promise of faster, more reliable wireless communication, adds another layer to silver's demand profile. Silver's properties make it ideal for the switches and connectors that 5G technology relies on, ensuring that as the world becomes more connected, silver's role in enabling this connectivity becomes increasingly prominent. This confluence of technological advancement and environmental stewardship creates a unique demand dynamic for silver. It's a dynamic that's rooted in the metal's intrinsic properties and amplified by the global commitment to a sustainable future. As we navigate through this transformative era, silver's industrial demand is not just a testament to its versatility, but a reflection of its indispensability in crafting a greener, more technologically advanced world. In weaving the story of silver's integral role in technology and the green transition, we glimpse into a future where the metal's value is measured not just in market prices, but in its contribution to societal progress. For investors, understanding this trajectory offers a window into strategic opportunities where the returns are not only financial, but also contribute to the broader narrative of sustainable development and technological innovation. As we continue to explore the multifaceted journey of silver, let's remember that its story is interwoven with the larger tapestry of human progress. The chapters ahead promise not just insights into investment strategies, but a deeper appreciation for silver's role in shaping a sustainable and technologically empowered future. Stay tuned, subscribe for more revelations, and join us as we delve deeper into the evolving narrative of silver in our world.
The operative word, because it's all part of the it's the whole system. Uh, and are they able to kick? Have they been able to kick the can down the road? Yeah, they did for years and years by lowering rates. Now we've got much, the interest rate structure has gone up, call it threefold. So it's a huge move upward in interest rates. And I think Evergrande was one of the very first, but it certainly is not going to be the last, and it's going to spread. That type of problem is going to spread worldwide. Commercial real estate worldwide is going to be hammered. And I do want to mention one other thing, because we talked back in October, and it did look like the stock market was about ready to puke, and we've had this big rally in the stock market. I just posted on my site yesterday an article talking about the Buffett indicator, where what he does is he looks at total market cap of stocks in the U.S. versus GDP, and we're as high as we've ever been. So if you look at that and you say, well, this time it's going to be different, I think, yeah, this time it's going to be different. And I put as a quote in there that this time it's going to be different because in 2008, 2009, what I and many other analysts missed was that the Federal Reserve, central banks all over the world, the US Treasury, sovereign treasuries all over the world would blow their balance sheets to pieces in order to save the system. Now the question is,
Delving into the enigmatic world of silver, we find ourselves confronting a controversial yet pivotal aspect of its saga: market manipulation and the obscured reality of silver's true value. This chapter is not just a tale of economics, it's a narrative steeped in intrigue, challenging the very perceptions that have governed silver's valuation in the public eye and within the halls of global finance. For years, discussions around silver have been tinged with allegations of manipulation, whispers of price suppression, and debates over the disparity between paper silver, represented by contracts and derivatives, and physical silver, the tangible asset. This dichotomy between the physical and the paper markets is at the heart of the controversy, revealing a complex interplay of supply, demand, and speculative forces that often obfuscate silver's intrinsic worth. The suppression of silver prices, as alleged by some analysts and market observers, is seen as an orchestrated effort by certain large financial institutions and central banks to maintain a semblance of stability within the fiat currency system. By artificially keeping silver and gold prices low through the leveraged trading of paper contracts, the perceived value of fiat currencies is ostensibly protected against the revealing light of precious metals' true market value. This narrative suggests that if silver were to be valued purely on its physical supply and demand dynamics, free from the distortive influence of massive paper trading volumes, its price would reflect a reality significantly different from the one portrayed in current markets. Yet this story of manipulation is not just a tale of economic subterfuge. It's a reflection of silver's enduring role as a barometer of financial health and a beacon of monetary integrity. In a world awash with fiat currency expansion and concerns over inflation, silver stands as a testament to value preservation, drawing investors and observers alike into a deeper conversation about the nature of money, the role of central banks, and the future of global financial systems. The ongoing debates and investigations into silver market manipulation serve as a critical reminder of the complexities that underpin precious metals markets. They highlight the need for transparency, regulatory oversight, and a reevaluation of the mechanisms that determine silver's price. For investors and enthusiasts, these discussions open a window into the strategic considerations essential for navigating the silver market, offering insights into the potential for significant price adjustments should the alleged manipulative practices be curtailed or exposed. As we peel back the layers of silver's valuation conundrum, we're invited to ponder not just the economics of precious metals, but the principles that should guide fair and transparent markets. This inquiry into market manipulation transcends silver, touching on broader themes of trust, value, and the pursuit of a financial system that reflects the true dynamics of supply and demand, free from the distortive influence of undue speculation and manipulation. In navigating the complex narrative of silver's market dynamics, we're reminded of the critical importance of diligence, skepticism, and the quest for truth in investment. As we continue to unravel the multifaceted story of silver, let us do so with an eye towards understanding not only its potential as an investment, but also its role in reflecting the underlying currents of our financial world. Stay engaged, subscribe for more insights, and journey with us as we explore the deeper implications of silver's market manipulation and its quest for true valuation.
All kinds of leverage in the gold and silver markets, but that leverage is to the short side. And there's leverage, obviously, in the stock market, the bond market, that's on the long side. In other words, borrowed money has been and is being used to prop up stocks, prop up bonds, but it's also being used to suppress the price of gold and silver. And it's done via naked futures contracts on both COMEX and the LBMA. So what that does is that increases the supply, if you will, but it's supply of paper metal. It's not real metal itself. Once credit breaks, that's when, or once credit is much more difficult to get, that's when you're going to see asset prices declining in vast swaths because the debt has been pulled. On the gold and silver side, the way to close that trade, they're going to be forced to buy, not sell, because they've already sold. So uh, the suppression scheme has been done with naked short contracts.
As we navigate further into the depths of silver's narrative, we encounter the geopolitical chessboard where the BRICS nations, Brazil, Russia, India, China, South Africa, and the phenomenon of de-dollarization play critical roles. This chapter delves into the complexities of international finance and trade, revealing how these emerging economic alliances and strategic moves are reshaping the landscape in which silver operates, potentially catapulting its value to new heights. The BRICS nations, in their quest for economic sovereignty and reduced reliance on Western financial systems, have been at the forefront of a gradual but determined shift away from the US dollar. This movement, known as de-dollarization, is not just a political statement, it's a strategic reconfiguration of global financial dynamics, seeking to diversify reserves and trade settlements into a basket of currencies and tangible assets, including precious metals like gold and, significantly, silver. This shift carries profound implications for silver. As these economies grow and their thirst for autonomy intensifies, the demand for physical silver is poised to increase, both as a reserve asset and in industrial applications. Silver's dual appeal as an industrial metal and a store of value makes it uniquely positioned to benefit from the BRICS pursuit of de-dollarization. The bloc's efforts to bolster trade in local currencies, alongside the accumulation of physical silver reserves, could introduce a new era of demand dynamics for the metal, distinct from the traditional drivers of Western markets. Moreover, the focus on de-dollarization is intertwined with the broader narrative of global financial system realignment. As confidence in fiat currencies wavers amid unprecedented levels of monetary expansion and debt accumulation in Western economies, silver's role as a hedge against currency devaluation and inflation becomes increasingly pertinent. This is not merely speculative. It's a trend grounded in a historical context where precious metals have served as the bedrock of monetary stability in times of fiscal uncertainty. The stockpiling of gold and silver by major world banks, a trend particularly notable among the BRICS nations, underscores a strategic move towards assets that can withstand the vagaries of geopolitical tensions and economic volatilities. This accumulation reflects a collective anticipation of a financial landscape where tangible assets, especially those crucial for technological advancement and monetary security, gain primacy. This geopolitical reorientation towards silver, coupled with the strategic diversification away from the dollar, heralds a potential surge in demand that could see silver's price dynamics decouple from traditional market influencers. For investors and market observers, this presents both a challenge and an opportunity to navigate the uncharted territories of a global economy in flux, where silver's luster shines not just as a reflection of its physical properties, but as a beacon in the tumultuous seas of international finance and trade. As we ponder the implications of the BRICS maneuvers and the global tilt towards de-dollarization, it becomes evident that silver's journey is inextricably linked to the evolving narrative of economic sovereignty and the redefinition of value in a multipolar world. Stay tuned, subscribe for insights, and join us as we continue to explore the far-reaching implications of these geopolitical shifts on silver's role in the New World Order.
The biggest cracks, or the obvious ones, the biggest cracks are in real estate. I mean, if you look at I think last year of 2023 in the U.S., the amount of single-family homes that actually closed and changed hands, that volume was down about 50%. So I don't know if you're a technician or not, but classically, from a technical basis, price always follows volume. And I mean, obviously, there was less volume because of higher interest rates. You had less people that were able to afford a mortgage. I mean, if you had X amount of dollars, if you could afford $1 million house in 2021, by the end of 2022 into 2023, you probably could only afford a $600,000 house. It also has affected people that have a home with a locked-in low mortgage. They're not going to move because they can't afford the new mortgage. The real blatant crack has been in commercial real estate. I mean, how many commercial buildings this year are up to refinance their debt? And when you do it with commercial real estate, it's based on cash flow. And many of these deals were done. Here's an example. I think it was a hotel that was sold in 2015 for $605 million. They put uh, they put 300 million down. They borrowed 305 million. They walked away from the property in 2022, and it was seized late last year. And that debt is now being offered for $150 million. So that $605 million property is now valued. You can buy it for $150 million. I mean, that's a 75% haircut. My point being, someone has to take that loss. Obviously, the 300 million that they put down, that's gone. But within the banking system, there's another $150 million, billion dollars rather, that's gone. No, I'm sorry, $1 million. It's just one property. Uh, what I'm getting at is these losses are piling up. Who is gonna eat the losses? Are they going to end up on the Federal Reserve's books? Like what happened back in 2008, 2009. At this point, I mean, the answer to that is yes. But the Federal Reserve itself lost $114 billion last year, and the last I saw, their total equity was only $65 billion. So now you're looking at the central bank that issues the world's reserve currency is technically insolvent.
As we approach the zenith of our exploration into silver's multifaceted journey, we find ourselves at a crossroads of forecasts and analyst predictions, peering into the crystal ball to discern the future trajectory of this precious metal. This chapter is not just about speculative numbers. It's a synthesis of informed analyses, grounded in the dynamic interplay of market forces, technological advancements, and geopolitical shifts that have been steering silver's course. The consensus among financial analysts and commodity experts points towards a bullish future for silver, underscored by a confluence of factors that are expected to drive its demand, and consequently, its price to unprecedented levels. Central to this optimistic outlook is the burgeoning demand from the industrial sector, particularly from renewable energy and technological applications where silver's unparalleled conductive properties are indispensable. This demand is not merely sustained but poised to grow exponentially as the world accelerates its shift towards green energy solutions, electric vehicles, and next-generation telecommunications networks. Moreover, the investment landscape for silver is being reshaped by the global economic uncertainties, persistent inflationary pressures, and the volatile performance of fiat currencies. These macroeconomic trends are fostering a renewed interest in silver as a safe haven asset, attracting both institutional and retail investors seeking to hedge against currency devaluation and economic turbulence. The strategic shift towards precious metals, especially in a time when traditional investment avenues are fraught with uncertainty, is contributing to a bullish sentiment in the silver market. Analysts are also closely watching the developments in global monetary policies, particularly the actions of central banks in response to the evolving economic landscape. The anticipation of more accommodative monetary policies and potential interest rate cuts could further enhance the attractiveness of non-yielding assets like silver. Additionally, the discourse around de-dollarization and the increasing interest of sovereign wealth funds and alternative investment vehicles in precious metals are expected to provide further impetus to silver's price rally. Predictions regarding the exact trajectory of silver prices vary, but the overarching theme is one of significant appreciation. Estimates suggest that we could see silver breaking past its historical resistance levels, driven by a perfect storm of increased physical demand, investment flows, and geopolitical dynamics, favoring tangible assets over paper currencies. This bullish outlook is not just a reflection of short-term market sentiments, but is grounded in a deeper understanding of silver's role in the emerging global economic order, characterized by sustainability, technological innovation, and a redefined approach to monetary assets. As we ponder these forecasts and the myriad factors contributing to silver's projected ascent, it's clear that the journey ahead is fraught with both opportunities and challenges. For investors, navigating this landscape will require a keen understanding of the market dynamics at play, an appreciation for silver's intrinsic and strategic value, and a strategic approach to portfolio diversification and risk management. In wrapping up this chapter of our exploration, we're reminded that the story of silver is continually evolving, shaped by forces both within and beyond the markets. The predictions and analyses we've delved into offer a glimpse into a future where silver stands as a cornerstone of economic resilience, technological progress, and sustainable development. Stay engaged, subscribe for more insights, and join us as we keep a pulse on the unfolding
Foreign
narrative of
buyers.
silver's
I mean,
promising and pivotal
look at
role
Japan
in the
and
future
China.
of
They were the
finance
two
and
biggest
industry.
holders of treasuries. They've been bleeding their treasury holdings down for years. And just look at the BRICS. Why is there such a thing as the union of the BRICS? The whole idea behind it is they want to get out from under the boot of the US dollar. Because they understand that the dollar is strictly a fiat currency. It's a Ponzi scheme. And I mean, if you listen or read any of Putin's speeches, you'll hear him every time say, we want to do business, but the trade that we do, we want to be fair trade and fairly settled. In other words, they want to trade something real for something real, as opposed to something real for something that's nothing. And that's what the deal is. I mean, the U.S. does not. I mean, we have a huge trade deficit because we get products in and we send freely printed dollars back out, and that's why there is a BRICS, because they want to get away from, their view is the danger of holding dollars. And that's one reason why many of these central banks have been buying gold very, very strongly for the last 2 or 3 years, because they understand where this goes. They're going to end up with big black holes within their balance sheet that used to be dollars. So they're trying to replace those with something that's real and something that will go up in purchasing power as all these fiat.
As we reach the apex of our exploration into the multifaceted world of silver, we find ourselves synthesizing the myriad insights gathered from economic indicators, geopolitical shifts, technological advancements, and market dynamics. This conclusion is not merely a summary, but a visionary outlook, capturing the potential trajectory of silver, firmly grounded in the realities of today and the anticipations shaping tomorrow. Silver's narrative unfolds in real time against an evolving global economic backdrop marked by uncertainty, innovation, and a shift towards sustainability. Its dual role as both an industrial commodity and a monetary asset places it uniquely at the confluence of changes, providing a perspective on the market forces that could elevate its value to new heights. At the core of silver's story is its indispensable role in green technologies like solar energy and electric vehicles, which are pillars of the global transition to sustainability. Nations committing to renewable energy sources and carbon emission reductions forecast a surge in silver demand, attributed to its unparalleled electrical conductivity. This industrial demand, driven by policy initiatives and technological innovation, lays a solid foundation for silver's appreciation. Beyond its industrial uses, silver's allure as an investment asset is rekindled in a world wrestling with inflationary pressures and the debasement of fiat currencies. The strategic diversification into precious metals, silver included, by investors and sovereign wealth funds underscores a collective quest for stability and value preservation amidst economic turbulence. This trend is reinforced by discussions on de-dollarization and the search for alternative reserves, enhancing silver's position as a hedge against economic uncertainty. The interplay of global geopolitics and central bank monetary policies adds complexity to silver's outlook. The push towards de-dollarization by the BRICS nations, combined with central banks accommodating policies to address economic challenges, may increase silver's demand as a non-fiat value store. These elements together sketch a scenario where silver benefits from its traditional safe haven appeal and its significance in emerging economic sectors. Looking ahead, the potential for silver's value to appreciate significantly is underpinned by logical reasoning and a deep understanding of market dynamics. However, this path is not without its volatility, necessitating a nuanced approach to risk. Investors and observers are tasked with navigating this landscape strategically, weighting bullish prospects against potential headwinds from economic, political, or technological changes. In wrapping up our journey through silver's realm, we envision a metal defined not just by its history, but by its future potential. Silver's role in the forthcoming chapters of economic and technological development is not merely promising, it's pivotal. As we gaze into a future where sustainability, innovation, and economic resilience are paramount, silver emerges as a beacon for investors, policymakers, and innovators alike. For those poised to navigate the future with insight and foresight, silver presents a unique blend of opportunity and challenge, a testament to its lasting value in a world in transformation. Stay informed, stay engaged, and continue to witness silver's unfolding saga. as it not only shapes investment portfolios but also the fabric of our future economic landscape.